Hey guys, how's it going? Value Venture Investing here today. So today we're going to be talking about Air Canada. They just had their Q4 and full year 2021 results. Not 2022, I keep getting confused here. So what we're going to do today is we're going to go over these earnings. Of course, in Canada, it's not required that you break out the fourth quarter. So I did the math for you guys. I broke that out so we can compare it from Q1 to Q4. Then I'm going to go over what I heard in the conference call. There's a lot of really important information in here. If you're an investor, or you're curious about investing in the company, I think it'd be definitely worth it to listen to this. So we'll go through that next. And then we're going to go over their financial statements, which gives the year-over-year results. So taking a look at the stock here, it was up about 3% today. Over the last little while, it's been pretty range bound. It hasn't really done too much. Still waiting on that return to the previous equity price here. So I'll get into the later in the video when I think that's going to happen. But coming back to the financials here, of course, it was actually a phenomenal quarter. Passenger revenue was $2.04 billion. Now that's up from last quarter, $1.6 billion. And you can see that progression from 395 across there. Cargo revenue, I've said this before, guys, this is the one that's going to be continuing to grow, and I think it's going to actually push the company to further levels than it was pre the pandemic that we're in here right now. Look at that again, another all-time record, $490 million, almost $500 million in the fourth quarter. Of course, this was a record last quarter at $366 million. And then there, it was growth from 281. So if you want to see more on how that's grown over time, again, I have my Patreon channel, guys, where I'm going to upload these spreadsheets for you guys, where I kind of keep track of more of the companies that I'm tracking. So if you're interested, you can definitely click the links in my channel for that. Other revenue was $200 million. Again, that's up quite as well. So the total revenue was $2.7 billion, over $2.7 billion. And that's up from $2.1 billion last quarter. So versus $837 million, $729. So we're coming back. Revenue is coming back. We're going to get more into that, into what's actually happening. So that's very nice to see the growth happening. I think we're in recovery mode here. Net income, we still had a loss of $493 million. But again, we're pairing those losses. It was $640 million on Q3, $1.1 billion in Q1. It was $1.3 billion. So we're not back yet to profitability, but I believe that we're on our way. EPS was only a loss of $1, of course, versus 1.79 last quarter. And if you go back to Q1, $3.90. Cash, when this all started, I was concerned. I mean, I wasn't concerned. I thought that they'd be okay, but it was still obviously a concern of mine. How much cash could they keep on their balance sheet to weather the storm? But they've just been phenomenal at it. We've actually seen it grow. Of course, there's a couple other details why it has. We'll get into that. But $8.8 billion right now sitting on the balance sheet. Last quarter is 8.7, so we're up. And of course, we were kind of below 6 Q1 and Q2 there. So great to see their liquidity position increase. So I listened to the conference call. I saw the results and I thought, oh, that's a good quarter. But after listening to the conference call, I really think, I was like, this company's doing a lot better than I thought it was. And maybe that's why the stock has not responded too positively yet. And maybe this information hasn't been digested yet. So good for you guys to watch here. Of course, they said it was better than expected. They had some pretty good expectations, but it was still even better than they expected. 295% year-over-year revenue increase from 1 year ago. So we saw that up there. That's revenue, pretty phenomenal. Also purchasing, pushing deliveries and taking deliveries of aircraft that said they wouldn't. You can really see that they're in expansion mode. They pushed ahead some of the deliveries of their aircraft, specifically Boeings. They were talking about quite a bit. And there's some that they said they wouldn't even take. And now they've decided that they're going to take delivery of these. A lot of them are even paying cash for. So it shows you where they're going. I think a lot of that's probably going to cargo revenue and international, but we'll get into a little bit of that as well. 3,400 new positions were added. Most of those, it sounds like, were rehires, so they're bringing staff back. They expect things to be better. Another huge one here was they terminated the unrestricted credit facility with the government. So that was great. That gave them a lot of added liquidity if they needed it. But now they're thinking, no, we're good. And actually even better, only the special refunds remain, but also they canceled the warrants with the government and bought them back. So that makes it so that it was about half, I believe they said, the government can't dilute the shareholders anymore, right? So they're basically signaling here we are in a good position. So really like to see that. They had $10.4 billion of unrestricted liquidity, and that was up 30% as per about a year ago, I believe there. Also, they talked about Toronto in Canada here, and specifically an increase in their cargo capacity. And like I said, we've seen this cargo revenue skyrocket, and I really think that this is something that they're going to focus on going forward. They're going to focus on international, but they're also going to focus on this cargo, and I think this could be big money, and this could be a revenue driver, and hopefully find its way to the bottom line. In Toronto, they're talking specifically about increasing their cargo capacity, and specifically for things like pharmaceuticals and perishable goods. So they're kind of changing up their business structure a little bit from, it's just strictly passengers to maybe perishable goods, pharmaceuticals, things like that. So that's going to be really interesting to follow. One other thing that was kind of notable to me, I heard about in Canada, this new airline, Flair. Some really cheap air flights throughout Canada and even to the States, I believe. But I don't know much about it, and I didn't know the prices or anything, but man, they seem cheap. So they talked about competition. They didn't mention Flair specifically, but basically what they said was that their international travel is their competitive advantage. So you can see that they're not thinking as much of in terms of in Canada flights. Of course, there's still going to be that, but I think they've got these grander plans, these plans to focus on international, big travel, shipping, stuff like that. I mean, that's the way the company seems to be going. And it seems like there's a lot of profitability in that. So that gives me a lot of positive feelings towards the company. But we'll have to see how this one turns out. In terms of guidance, of course, they didn't really give any guidance. But they also said because of this new variant that came out early in the year here, they had to have some temporary setbacks. However, now things seem fine. And going forward, they actually expect it to be better than they initially expected, just as this quarter was better than they initially expected. So pretty phenomenal quarter and pretty phenomenal conference call. So now if you want to see it on a year-over-year basis, because of course they had the whole year of 2021 versus the whole year of 2020, we'll get into that right now. So taking a look at their balance sheet, here, of course, this is year-over-year 2021 versus 2020. Total cash, again, as we spoke about here, is about 8.8 billion versus 7.5 billion for the year a year ago. So great to see that increasing rather. Also, another thing I thought I'd mention here was just the total assets versus the total liabilities. Total assets were about $30 billion, $30.6 billion for the year versus 30.6. So you can see that it's almost like a 1-to-1 ratio. And generally speaking, that's a pretty good thing. So, I mean, you can look at the individual categories here if you want, but that's just something that I wanted to mention. In terms of their income statement here, again, on a year-over-year basis, we saw the breakdown I talked about here in terms of their operating revenues, and that was 6.4 billion versus 5.8 billion for the 2 years compared there. Operating expenses, they went into depth on quite a few of these. They talked about aircraft fuel again here. It was about $1.5 billion, but you got to keep in mind it's up year over year because, of course, they've been increasing their flights, increasing their capacity, but also fuel's been going up, with inflation and stuff like that, right? So they also mentioned that they are still not going to be hedging, which is something that a lot of airlines like to do. So that'll be interesting looking forward. I guess it's to do with these futures markets again. I mentioned this and talked about this on my last video or a couple of videos ago, I believe. So their operating loss was just over $3 billion versus 3.7 billion for the year ago before. So that has increased. So they've definitely streamlined their expenses, and shows how much more efficient they've become operationally speaking. In terms of non-operating income, the total non-operating expense was $932 million loss. It was over $1 billion the last year. So again, an improvement there as well. Also, loss before income taxes, they had income tax recovery, so that increased their EPS a little bit there, and their bottom line of $379 million is basically what they got back. So their net loss was $3.6 billion for the year versus 4.6 billion. So about $1 billion difference. So we saw a pretty significant increase there as well. Net loss per share is $10.25 for the whole year versus almost like double that for 2020 at $16.47 per share. In terms of their cash flow statement here, net cash flows used in operating activities It has improved, only $1.5 billion loss in operating activities versus 2.3 billion rather, for the year in 2020. In terms of financing, there's a couple things to look at here. Share purchase for cancellation. So that's what I talked about there, about that $132 million in 2020, and then nothing over this year. Issue of shares, 555 million. They had an inflow of cash because they issued some shares, which of course is dilution, but it's down from the 1.369 billion a year ago. So for financing as a whole, they had an inflow of $4 billion versus $4.7 billion for the previous year. In terms of investing, you can see investments short and long term. We had $862 million in investments versus 63. So you can see that's kind of like that picture right there in the numbers talks about what I'm speaking about in terms of cargo delivery, increasing their capacity. Huge increase in terms of their investments right there. So of course, investing activities, the net cash flows used for those is 1.869 billion. Huge difference from 733 million dollars that they used for the 2020 year. But I definitely see that as a huge advantage going forward. So overall, I think this was a phenomenal quarter, especially what they're talking about on the conference call here. But I would love to know what you guys think, maybe specifically about this Flair airline, because I know like nothing about them. Maybe what you think about their cargo revenue going forward. Yeah, lots of interesting and maybe big things on the horizon. So would love to know what you guys think. Leave comments down below. Don't forget to like the video, guys, and subscribe. Really helps the video, really helps the channel and the videos. And we will see you guys in the next one. So that's going to be everything for today, guys. We'll see you in the next one.